Soon they will reset the dollar, and if you're not prepared, it's probably not going to go well for your portfolio. So if you hold gold, silver, have a retirement account, or even if you hold stocks, pay attention, because today I'm covering what the dollar reset will do to your gold and silver and how you can prepare your portfolio for the reset. Right, first, so why are metals falling right now? Why is gold and silver following? Well, it all comes down to the Fed. The Fed's holding rates up and talking tough on inflation, which keeps the dollar strong, and a strong dollar pushes gold down. Add to that this whole golden age of America story that Trump's out there selling every day, the booming jobs, the AI money flooding in, everyone hands their trust back to the dollar, for a while anyway. And gold is mostly just a measure of trust in the dollar, because the more trust in the dollar, the more people sell gold and hold dollars. So that's the machine keeping metals down right now. But this week, guys, the machine started making some very interesting noises. Chip stocks and microchip stocks just finished their worst week in more than a year. The whole index is down over 20% from its June peak, which is the official definition of a bear market, by the way. But Morgan Stanley still wants you to buy AI stocks while they buy your gold. Allegedly. SpaceX, the poster child for this entire AI mania, is down 44% from its peak. So it's down as much as silver, but silver went up 250% first. SpaceX didn't. So what's its excuse? SpaceX is now the poster child for the AI story collapsing, not the AI mania. It's trading at $125, while the banks who sold everyone the IPO still have their price targets at around $230. And remember, these banks are JP Morgan Stanley, and Goldman Sachs. They are buying gold while telling you to buy SpaceX and setting their targets for SpaceX at 200, 230, and these absurd prices, allegedly. Well, no, they are setting their prices there. Anyway, but then you get this company called Morningstar. Who is Morningstar? It's one of the world's largest independent research firms. It's used widely by professional investors, highly regarded, and it has a great track record. Guess what they think the fair value of SpaceX is? I know I'm talking a lot about SpaceX. We'll move on in a second, but it's important. So what do they think the fair value of SpaceX is? Well, Morningstar, it's important to note, is not in the whole AI syndicate that's paid off to give you good news about SpaceX. So they value it at $63, the actual fair value. I mean, make of that what you will. Oh, and the other thing, the people building this whole AI boom are starting to behave quite strangely. The big 5 tech companies plan to spend $1.2 trillion on AI infrastructure this year. And Meta has already started trying to resell its AI infrastructure because it doesn't need it anymore. When even Meta's flogging off their infra and their compute power that they just bought, something is kind of off, right? You know, you just bought something and then you're desperately trying to sell it. Doesn't look good. Now, you could shrug off any one of these things and just call it a market wobble, and you might be right. But then there's this article from the Financial Times that drops. Martin Wolf, their chief economics commentator, about the most establishment voice in financial journalism. He published a piece about the next crash. He points at the CAPE ratio, the CAPE ratio, which is just a measure of how expensive stocks are compared to real earnings. It hit 41.4 this month. That's the second highest reading in 145 years of data. The only time it was ever higher than that was December 1999, which was 3 months before the dot-com bubble top. For scale, September 1929 came in at 32.6. That's an important date because it's 1 month before the October collapse that created the Great Depression. So we're miles past that. Now, honestly, look, that's not a very fair comparison because we're in a different world to 1929. It's been 100 years. But still, it's pretty crazy that earnings are so far underneath valuations right now. Oh, and get this, by the way, Wolf's advice, and Wolf is the Financial Times columnist that I mentioned, his advice to his readers was to hedge with options, with cash, and I quote, with precious metals. So the FT spent the last 3 years telling everyone that people like me, people like you, are paranoid gold bugs. And now their most senior columnist is telling readers to hold metal. Shit is getting so bad and so obvious that even the gold skeptics are becoming gold bugs right now. His colleague, John Plender, went even further and put a clock on it. His guess was that the crunch comes within the next 12 months. So the AI bubble is going to pop within the next 12 months. Anyway, look, I'm not saying that the FT is suddenly right about everything. I mean, they're probably not. The point is that everyone is catching up to the idea that the dollar is not long for this world, nor is AI. And by the way, when I say AI is not long for this world, I mean, people are still going to be using AI. It's just that AI stocks being so overpriced is probably not going to last much longer. The bubble will pop. Which brings us to the reset. Look, a government with too much debt has two honest options for getting out of debt: cut spending or raise taxes. But nobody gets re-elected by doing either of those things. So they always pick the third option or the fourth option. And those both involve debasing the currency, or in other words, printing. America's done this before, by the way, and there are two speeds to this. There's the slow version and the fast version. The slow version already ran once. So America came out of World War II with a debt to GDP ratio of 106%. And instead of paying it back, they held interest rates below inflation for the best part of 20 years. When interest rates are below inflation, it means that the money you have in the bank earns less interest than you lose to inflation. So you're basically losing money by holding it. And thanks to this scam of the American people, by the mid-70s, the debt was down to 23% of GDP from 106%. And nobody ever paid it off. They just let inflation kind of eat away at it. And the fast version, let's talk about the fast version. Roosevelt repriced gold from $20 an ounce to $35 an ounce overnight, a 69% markup. And with the same stroke of the pen, the dollar lost about 40% of its value to gold. They didn't call it a devaluation, of course they didn't. It was dressed up in legal language about stabilizing the currency, blah, blah, blah. You know, they always do that kind of stuff. So when I say reset, that's what I mean. One morning, breaking news, the president, the treasury secretary, the Fed chairman, they're all stood around one podium. They'll say they're revaluing, they're restructuring, they're modernizing the dollar, probably to include some stablecoin crap, whatever the comms people land on. But really, what they're doing is they're resetting the dollar. Now, fair question, why would they ever do it fast with a press conference when the slow version works without one? Because the slow version needs the bond market to just sit still and take it. America is paying over $1 trillion a year in interest right now on its debt, more than its entire defense budget, and the bond market's patience is wearing thin with this. When the slow version stops working, that's when they start going for the fast version. I don't know when this happened. Nobody knows when, not for sure anyway. But if I have to guess, it would be after the midterm elections, which are in November, probably in the following months, January, February, something like that. But what happens to your gold when they reset the dollar? That's the whole point of this video. First, just a small fact you may or may not know, the official price for gold in the US is $42 an ounce. Obviously, it's worth way more than that, over $4,000 an ounce, but on the US's books, their gold holdings, they set the price back in the 1970s and they've never updated it since. Technically, this doesn't matter much, but it does matter a little, and let's talk about that little. On reset day, they're likely to start with repricing gold like they did in the 1930s. So they essentially update the price of gold on their books to 4,000 or 5,000, whatever it may be. And that's simultaneously changing what the dollar is worth against gold. And once that number exists, think about what it actually means. The US government has just told the world in writing what its own currency is really worth. Now, if that doesn't make sense, let's talk about the exact thing that happened the last time they did this in the 30s. So after the 1934 reset, gold basically never traded below $35 again for decades. The new official price didn't act like a ceiling, it acted like a floor. And think that through. Once the state itself has declared gold is worth $35, who on earth is going to sell it to you for $30? The government just became the most credible buyer on the planet at that level. And whatever number they pick, it matters less than you would think. Reset gold's price to today's price, and they are admitting the devaluation that already happened to the dollar. Market higher and the market gaps up to meet it. That's probably what's going to happen. So if they reset gold to $4,000 or anywhere above that, that number becomes the base for gold. Now let's talk about $10,000 gold, because people throw that number out around here on YouTube as if it's a good thing or it's easy for gold to hit 10K. From 4,000, 10 grand is about 2.5x from here. Between late 2008 and 2011, gold went from about 700 to over 1900 with no reset at all, just fear and money printing. A number like 10,000 just means that the dollar got officially repriced and the world scrambled to adjust. Now, I think this $10,000 number is a bit extreme. I think it's plausible for gold to go there, but I think it is extreme. But that being said, every central bank on earth is already positioned for it. I'm not saying that they have a 10K target, but they are buying gold as if it's going to 10K one day. They bought another 244 tons of gold in the first 3 months of this year alone. These are the people who print money, and they keep swapping their money for gold for something they can't print. So I'm not promising you $10,000 an ounce. Write that down somewhere. Nick did not promise $10,000 an ounce. And honestly, for gold to get that high, something would really have to break in the world. The AI bubble plus the US dollar and maybe this Iran thing spiraling out of control, making the fuel crisis a lot worse, things would have to get really bad. So if gold does go to 10,000 anytime soon, it'll mean that the world is probably in a very bad place, which is exactly why you want to be holding gold. That's the exact scenario in which you you want to be holding a lot of gold when the world's in a bad place. So for us, it would be kind of a good position to be in, even if everything's crumbling. By the way, if you want to see exactly how I'm positioned for all of this, I've written it down in a free guide on how to retire by 2036, 10 years from now. There's a link to it below, and it gets you on my newsletter too, which is also free. Right, so let's get back to it. But now we need to talk about something a little bit more serious, because what happens to your gold when they reset the dollar depends on what kind of gold you hold. Picture two guys, both are convinced that they hold gold, but one holds a gold ETF in his brokerage account while the other holds gold coins in a safe. On a normal Tuesday, those two things trade within pennies of each other. On a panic day, they split apart. And we don't have to imagine it because we watched this happen in March of 2020, when COVID hit. COVID hit and everyone wanted real metal all at once, right as 3 of the big Swiss refiners shut their doors. The gap between paper gold in New York and the actual deliverable bars blew out to about $70 an ounce, a record at that time. Silver Eagles were selling 50% over the screen price when you could even find any. Dealers were just cleaned out. And reset day is that, but times 10. The ETF bloke owns a claim in a very long queue, and the guy who actually owns physical, well, he actually gets his gold or his silver because he has it already. If you don't hold it, you don't own it. Now, that being said, I do think eventually ETF holders will be able to sell their positions, but it's nowhere near as safe as holding real gold or silver. Speaking of silver, let's talk about what silver does on reset day, because it's a completely different story, and I've barely seen anyone cover this one. Here's the thing, silver isn't really invited to the reset, so to speak. The US government can't revalue its silver for the simple reason that it doesn't really hold much of it. I mean, it holds some, but it's not stockpiles like they do with gold, if you even believe they still have their gold. In 1958, the US Treasury sat on 2.1 billion ounces of silver, one of the greatest hoards in history. Then they spent it. They minted it into everyone's dimes and quarters until 1965, when the Coinage Act took silver out of the coins. The rest of it went out the door to anyone holding silver certificates, paper you could swap for physical metal. So on the morning itself, silver is a spectator, but that's actually a good thing. A reset is the government admitting that the dollar is worth less than everyone pretended it was. So all the money hiding in dollars starts hunting for an exit, starts looking for something else to buy. The gold exit just got repriced by the government overnight. It's probably pumping really hard. It's on every front page, and physical coins are trading 50% over spot if you can even find them. And sat right next to that is silver. Silver's also been money for 5,000 years. It's had 5,000 years of monetary history, and it's still priced like nothing has happened yet. Silver has a tendency to catch up violently to gold, and then it even outpaces gold. So I'm not worried about silver. I think it's just going to follow gold eventually. It might take a few days, it might take a few weeks, but it will follow, in my opinion, not financial advice. Which brings me to the part where I annoy the perma bulls. I think there's more pain to be had first with gold and silver. Short term, the machine we talked about at the start is still switched on. Rates are held high, strong dollar, golden age story. All of it is running flat out, at least until the midterm elections. Gold sat at around 4,000, and I've said before that I'm expecting the low 3,000s, maybe the mid 3,000s, maybe 3,500, but the low wouldn't shock me. Silver can bleed worse than gold because everything that makes gold fall can make silver fall even harder. And here's the thing that gold and silver YouTubers don't really want to admit, but I'm fine to admit it because, I've lived through it several times. The AI bubble popping, which is arguably already starting, like we talked about earlier, that will drag gold and silver down with it temporarily. When a bubble bursts, everything gets sold. Margin calls come in and people sell their gold and silver to cover their positions. It happened in 2000, 2008, 2020. It's just how it works. So the cracks we covered earlier, the microchip bear market, SpaceX cut nearly in half, a cape reading near the dot-com bubble levels, it all leads down the same path, really. Throughout history, every bubble has popped, so will this one, and when it happens, I think gold and silver will go down temporarily, then they will come back with a vengeance. Now, which one of these comes first is anyone's guess. Maybe the bubble pops first and then they do a reset. Maybe they do a reset, then the bubble pops after. It doesn't matter in the grand scheme of things, because all that matters is that over a long enough timeline, gold and silver have always trended up. And now even the skeptics and the tourists are catching on. Even they are starting to realize that they need some exposure to gold and silver. So what am I doing? What's my plan? It's the same as it's always been. I'm just holding on to my gold and silver positions. I have cash on the side. If gold drops down to the 3,000s, the mid to low 3,000s, and silver to the 40s, I'll buy up large large amounts and I'll sit on them, wait patiently for them to reset the dollar and make my gold and silver positions fly. That's my plan. The plan is simple when it comes to gold and silver. You hold it, preferably the physical stuff, and you just wait patiently. There's a saying about gold, by the way. In the 1920s, an ounce of gold bought you a fine tailored suit, roughly $20. In the 2020s, now $20 buys you a pocket handkerchief for your suit. Not even that really, but an ounce of gold still buys you a fine tailored suit. That's why patience in gold and silver pays off. Anyway, hopefully they're quick about it and they pump my gold and silver. Do you think they will be? Anyway, I'll see you on the next one.